All right, welcome back to Market Day Report. I'm Scott Shellady, and this is it, right? It's the last time we're going to see each other before we close out the day here. This is the last 15 minutes of trade. This is probably the most important part of the day, so we're going to make sure we're on top of things for you so you've got a good idea about what's been happening and where we may be going tonight and into tomorrow morning. How about corn? What's been happening so far in corn? We're about 5 1/4 cents lower in that D's contract. The 571 1/4 last. That's a penny off the lows, basically. So corn trading heavy. March is off 6 1/4 cents at 577 3/4. Moving right along, let's talk about soybeans. Much the same over there. Jan's off 5 cents. 12.52 1/4 last. The only good news is we're about 4 cents off the lows. March 4 1/2 cents lower at 12.64 1/4. All right, here's where you have to do the warning about taking a look at these losses in wheat. Dees is down 13 3/4 cents at 812 1/2. This is Chicago wheat. March is off 14 3/4 cents at 822. So Chicago wheat trading kind of heavy as well. A penny and a half off the lows. Let's see what's happening over in Kansas City. That's also lower. 12 3/4 cents off in Dees at 823 1/4. But the good news is we're about 7 cents off the lows in Dees. March is off 13 3/4 cents at 824 3/4. So down, but not as low as we have been. That's going to be the positive we can take away from that. Spring wheat also getting hurt today. Dees off 9 3/4 cents at 1016 3/4. While March is off 11 1/2 cents at 1018 3/4. And then my favorite as of late, let's see what's happening at cotton. Cotton's up 39 points at 118.01, and we've got that March making a run towards 115. At 114.99, that's up 35 points. Let's bring in Ted Seifried from Zaner Ag Hedge. Ted seems to be everywhere. He is Mr. Ag. Anything stand out to you in those contracts we just rattled off? Anything that you've got an axe to grind in?
I think wheat's having a little bit of a correction. It's led by spring wheat, although it's interesting to say that that Minneapolis contract's 15, 16 cents off the lows right now. So, I wonder if that's a bit of a canary in the coal mine and maybe saying that the correction in wheat might have been completed today. Maybe we go higher tomorrow. But the big one is corn. Corn has been heavy here today. It's been 2 days in a row where price action in corn has been a little bit heavy. A lot of that is coming from the Chinese corn prices coming down for the last 3 days, breaking off of their highs. To me, it looks like an overall correction or small correction in an overall bull market. In fact, the lows that the Chinese corn contract had overnight looks like very good support for me. I wouldn't be surprised if it is higher tomorrow. I wouldn't be surprised if our corn prices were higher tomorrow. Overall, I think this is, for us, just a bit of a pause in an overall bull market. I think we are going higher in corn. We still have the acreage and input costs battle raging. I will say this, the market's a little disappointed that China has bought some Ukrainian corn in the past week. When you look at the math, it looks like we should be cheaper to China than Ukraine to China. So the question is, why are they doing that? But the market seems to forget that China, for 10 years or more now, has had a commitment to the Ukraine to buy 3 to 5 million metric tons of their corn a year. This is normal stuff, China keeping up their commitment. Look, China wants to play well with all of their agricultural providers, their agriculture exporters, Brazil, Ukraine, because if they ever have problems with us, they know that they can fall back on them. So they're going to keep up with those commitments. I don't think the market should be disappointed by that. I don't think that's a real big reason for us to say corn has to go lower from here. Again, overall, I think the corn market just taking a little bit of a breather before it resumes and goes higher. I'd say the same thing for soybeans and soybean meal in particular.
Yeah, I mean, if you're a bull, you got to give me a reason, and they haven't given them a reason for today. All right, stay right there, Ted. We're going to take a quick break, go pay some bills. We'll come back and talk livestock with Ted Seifried from Zaner Ag Hedge after these messages. Welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy, and we've tried to bring you these markets and a little bit what's behind them, right? Not just the numbers, because it's not just the numbers. We need to know the why, the where, and the when, and hopefully we're getting there. Let's talk about the why, the where, the when it comes to live cattle, and bring up a live cattle chart here for us. This is a little something for everybody, right? Look at this. Dees unchanged at 131.77. We've got Feb off 22 cents at 136.10. But as you go out the deferreds, we slowly but surely get some of that real estate back. Finally, where August is up 22 cents. But you can tell by the change on day. I mean, it's very, very quiet over there. How about feeders? Let's talk about what's happening over there. We've got a lower corn board, so we might get a little bit of a bump here. Jan's up 62 cents at 159.10. We've got March up $1.02 at 116.90. And then finally, we're going to go to lean hogs. Lean hogs, what do we got going on here? Deese is up $1.80 at 77.60. Feb's up $2.05 at 83.22. Let's bring back in Ted Seifried for one of my. Ted, I've got a question for you. You know, you do the crop tour, and I've been sitting here since basically July 1st. It was a disaster apparently in the western U.S., Western Plains. We had some really hot and dry weather, as we all talked about all summer long. And I just want to know, where do you stand on crop conditions? Because it just seems to me, and I don't have any I have only anecdotal, I don't have any empirical evidence, that it doesn't add up to what we were hearing all summer long. You know, it was going to be a disaster out there, and it hasn't really shaped up to be that case. Is there a little bit of a disconnect there, or is it time to maybe do something different than crop conditions?
So, Scott, something that I'd like to point out here. The crop tour, Pro Farmer crop tour estimates that came out at the end of August, third week in August, are exactly the same numbers, yield numbers for corn and soybeans that the USDA is using currently. So what we saw out on crop tour is exactly what the USDA is seeing now. It took them some time to come to it, but that's where we're at. And I got to say, going back to crop tour, that's one of the most important things I do every year because I get to actually get my boots on the ground and see what's going on. I spend a lot of time doing that in the East. I go on the western leg of the crop tour so I can get into more of the western side. And I was surprised by what I saw in South Dakota and especially Minnesota, and surprised to the upside. Well, guess what? Now the USDA is reflecting all of those same things that I saw. But to your point, you know, on a year where we had D2 stage drought in a lot of areas, and yet we're getting some very good yields, specifically for soybeans, it makes you wonder, how much do we have to worry about weather? And my answer to that is, hey, if we don't get the inputs put down for next year we really will have to worry about weather. But this year, we obviously overperformed.
All right, good answer. I'll take that. That's perfect stuff. Thank you very much. That was a long one for me to ask you, not fair. That's Ted Seifried at Zaner Ag Hedge in Chicago. We'll bring it back here to Tammy in Nashville.